Industries on our radar, the joint CFO, Shalinee Mandhana, joining in on the show right now. Shalinee, hi, morning. Great to have you on the show. The government here in India has substantially increased allocations for housing, roads, railways, and defense sectors. Just wanted to understand what kind of growth then do you foresee or potential can we expect in the next 3 to 5 years for your company? You think a 30% growth rate is likely to sustain in the medium term?
Good morning and thank you for the call. Government's thrust since last 3-4 years on housing for all segment, then making world-class infrastructure for the country, and thirdly making India self-reliant in defense products. Obviously, augurs well for our industry. And the 30% growth guidance for the current year, we have said on the projections that 15% should be from volume and 15% on the balance should be from price rise. But the global economy is still under a bit of turbulence with the geopolitical issues. Inflation, no doubt, has started coming down, and in the interest rate rising scenario, along with the forex volatility. So these challenges are there, but despite this, we feel that 30% growth for the current year is sustainable. And for next 2 to 3 years, we see a CAGR growth of around 20% plus for our company.
Right. Just wanted to understand your current market share in the country stands at about 28%. With domestic demand now expected to pick up, I just wanted to understand what kind of market share gains that we can expect from you.
Current market share is around 25% plus for our company. We have planned two cartridge new plant locations in the country. One should be there in southern part and the other in northwestern part of the country. With this, we feel that our market presence will no doubt increase in these areas. And thirdly, we have announced an acquisition of Rajasthan Explosives, that is an explosive manufacturing company in central part of the country. So that should also pan-India presence should increase further with this acquisition and the growth plans.
Good morning, Nentar also joining in on the conversation. You've also had a very good innings in the stock markets of late. Last couple of trading sessions, a regular feature in the 52-week high list for the year to date, higher by 99%. So that's as far as the stock chart goes, and a quick check. And, a lot of this because of the strong performance that we're seeing by the company domestically and, of course, in exports. Speaking specifically for the exports, what would be the outlook going forward for the second half? Has your order book also had to suffer, whether it was inflation earlier, supply chain constraints also that were there?
As regards exports and overseas sales, in the first quarter, we registered around 38% of our total sales from exports and overseas. And going forward also, we see a similar growth in that sector. Currently, we are present in we have 7 manufacturing plants in the overseas locations. And this year, we are coming up with Australia and Indonesia plants also. Our products are supplied to over 65 countries. So with these projections, we see the momentum should continue.
Okay, and we've seen increased, mining opportunity plus the defense orders that have started to show traction. If you were to just see other defense companies, particularly the PSUs, we can see how their order book is going up. Very strong thumbs up from the markets as well. So for that segment, talk to us a little more. What's the plan?
Yeah, the defense segment, currently the order book stands at around 540 crores. That has to be executed over a period of 1.5 to 2 years. And coming with recently, the DAC, that is the Defense Acquisition Council, has given that 2 companies' name has been approved for the Pinaka rockets with order size of around 8,500 crores. So one is our company and the other is the Ordnance Factory. So with this, we are expecting the RFPs to come soon. So this order book should also grow in the coming time.
And how the current pricing trends, speaking more about the defense segment only, let's say for explosives, have the realizations still been at elevated levels? Have they cooled off? Because typically when, of course, there is a war on, and we've seen that for the last 6 months, we know what the cascading impact is across industry globally.
Yeah, the price pressure, the cost inflation, we're seen in our margins for the quarter, where the margin had come to 18%. So we see the prices of the commodity softening in the coming quarters. So the margin should stabilize when the prices also stabilize.
Right, Shalinee, great to have you on the show and good luck for the future. That's the word coming in from Solar Industries there.